Welcome to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Welcome to the Bull, the Bear, and the Ugly. So at one point today, we saw the S&P futures dip below the 6,400. Like I said yesterday, if we push up to new highs, the Qs traded 571, 571.50, 572. Spiders 638.50. They dropped 35 points off the high. Nasdaq, the Qs dropped about 4 or 5 points off the highs. What did I say yesterday in the Bull, the Bear, and the Ugly? I said, if we get any push up, you got the negative MACDs on the 30 and the 60-minute time frame. Good luck. They're not going to, the market's going to stall up there. And that's exactly what happened. And I'll show you the chart. This is exactly how, when we do our work, we're able to look at the market going into the next day. We did have the consumer confidence number come out better than expected, but it didn't make a difference. This market is due for a pullback, way overbought. It was like throwing a dart. Gold today acted really, really well. Great pattern when the GLDs reversed to buy on the 30-minute time frame, got that pullback on the gold. Gold rallied from 33.76 to 83.84. I'll show you that pattern. We had some big sell reversals here on NVIDIA on the 30-minute time frame, Avago on the 30-minute, Palantir on the 30 and the 60. When you get markets like this, SMCR reversing to sell on the 30 and on the 15. When you start seeing patterns like that, you really have to start saying the Russell really, really weak today. The Russell, beautiful short. The 30-minute time frames reversed to sell. What do you look to do? You short the first bounce on the 15. Then you had it's called a double red short. And I'll tell you, it's off to the races. These patterns, and I'll show you these patterns, were phenomenal. So let's just start with looking here on the spiders, okay, on the 30 and the 60-minute time frame. So this is what I was trying to explain to you here, okay? I'm going to show you some really great patterns here. So we push up this morning, 638.67. You can see here's the new high. The MACDs, come on. I mean, this is a clear sell divergence here. The MACDs did not confirm the highs. You can see the push up into the negative MACD on the 60. Beautiful push up here, non-confirmation. They had one place to do but go down, 634.69. You can see the S&P futures dropped north of 40 points off that. When the 30-minute time frame reversed to sell, then you look to short the first bounce on the 15-minute time frame, and that's exactly what happened here. You can see right here that the bounce here on the 15, right around the 1 o'clock time period, 1:30. This has been the time period that a lot of the 15s have been setting up between 1 and 1:30. This is an absolute Picasso. Push up here, overbought into the negative MACDs, and this is a sell disconnect. You get the first bounce on the 5-minute time frame, and absolute on the 15, absolute Picasso. Let me show you another great pattern here. This is called a double red short pattern. So a double red short pattern is when you have the 30, you can have a double red short in a negative trend and or in a sell disconnect. A double red short means that the 5-minute time frame on indicator 4 reverses to sell. Okay, and it correlates with the 15 and the 30, which is the sell disconnect. You take the first bounce here on the 5-minute overbought. Here's 1, here's 2, and here's 3, and all great short patterns on the double red. This pattern is phenomenal pattern. If you look at the inverse on the SDSs here, you can see the SDSs. This is a double blue buy. The 5-minute correlates with the 15 and the 30. Here's the pullback. Not to say you're going to go long it, but it confirmed the shorts on the spiders. Great, great pattern here. Let me show you another great pattern. S&P futures reverse to sell on the 15-minute time frame at 145. So in this example here, the 15-minute time frame on the S&P futures, when it reversed to sell, not only did it correlate to sell with the 30 and 60-minute time frame that put it in a negative trend, it also correlated with its 15 and 30-minute time frame on the spiders. Okay, so this again, this pattern here, if you're trading index futures, you take the first bounce here. We were shorting here 09 to 14, got kabooshed here. You can see pushed up again a little bit. Here's a second bounce above 11. It dropped here about 6. And then here's another one here, but this is the other one here at the end of the day, right around 4 o'clock. We called this short on the push up between 05 and 10. The high was 08, and you can see the drop here. So again, when the 15-minute time frame reversed to sell on the S&P futures, you have now a correlation. Not only is it correlating with its 30 and 60-minute time frame, it's also correlating with the underlying ETF, the spiders on the 15 and 30. And now you have the double red short. Beautiful. The 5 goes negative. This is the bounce. Look at this beautiful bear flag. Caught this short here on the S&Ps. We were 13.5 to 18.5 with a 21.5 stop. The high was 19.25, and it got absolutely kabooshed down to 13. Actually down to 13, and then traded lower actually after that, after the low initial push up. And then when the 5-minute time frame reverses to sell, okay, what do you look to do? Well, you take the short on the 5-minute, reverses to sell. You take the short on the 5-minute, and then another short on the 5-minute. This is a double red short. So in this double red short, the 5 correlated with its 15, 30, and 60, where you're in a negative trend. This is an absolute Picasso, an absolute Picasso. All right. So with that being said, again, it's really predicated on understanding the patterns, understanding the conditions here. If you look here on Microsoft, well, let's look at Apple. I mean, Apple, another good one. I couldn't believe what I saw this morning on Apple. Apple pushes up here early in the morning, and let me show you this. I was busy trading AMD all day today. But Apple, let me just show you this pattern. Apple pushes up here, bing, ding, ding, right here. It opens at 214.16, pushes up to 214.81. Look at the negative MACDs on the 30. Look at the negative MACD on the 60. The 30 is already negative. It's a sell disconnect. You're pushing up. The MACDs are non-confirming on the 30 and 60. When the 60 reverses to sell, now you're in a negative trend. You can see the yellow dots here. And what do you look to do? Well, you have choices. You can short the 5-minute time frames. Okay, every short on the 5-minute was phenomenal. Here's a great short on the 5, 212.38, kabooshed. Here's another great short. Here's another great short. But most of all, if you take the short on the 15-minute time frame, and this was it right here. This was the really good short right here. 212.39, and you can see that Apple never looked back. You have the rising ADXs on the 15, the rising ADXs on the 30 and 60. You get the overbought condition. This is an absolute Picasso on Apple. Monster short there on Apple. Monster short. We got SMCI here reversing to sell. This is another great one here. We're going to get the sell signal on tomorrow. But when SMCI reversed to sell on the 15 and then reversed to sell on the 30 this morning right here, you can see SMCI reverse at 11:30. You take the short here. You can see the short right up into the 10 bar, 60. Actually, I was shorting this here, and then it never looked back. You can see the drop of about $1.50 on SMCI. Really, really, really great pattern there as well. All right. Also, let's look at Palantir, PLTR. All right. You can see that Palantir reversed to sell here on the 30-minute right here. Oh, that's today right here, 10 o'clock. We're already in sell mode, so we pushed up. I shorted this above 160 again. You can see that the MACDs are not confirming the highs here on Palantir. The 60 reverses to sell. And then what do you look to do? You short the first bounce here on the 15 and the 30 right around here. You can see the 156.93, and Palantir dropped about, well, if you got it here, it dropped about $1.60 before rallying here. Great patterns there as well. Amazon this morning, what a short off the 15. You can see Amazon pushed up here above the 234.70. The MACDs did non-confirm here on the 30 and the 60-minute time frame, monster short. And then when the 30-minute time frame reversed to sell here at 11, you take the first bounce on the 15, 391.92, and Amazon just never looked back. Great short. AMD, okay, AMD was a wild one today. Whoever bought this here, 182.31, he jumped. I was shorting this thing all day, and then it dropped. But once the 30-minute reversed to sell, I knew that AMD, that the 15 and the 30 reversed to sell. Once the 15 reversed to sell right here, I knew there was a significant high probability chance right here that the highs were in for the day. We did get the buy signal with the AMD, with the MACD above the pivot, and that to me is a no-no. You remember, you take the short first when the MACDs are above the pivot, crossing above the pivot, and then what do? You take the short, and then you maybe wait for a pullback on that. But however, you can see that AMD, when it pushed up here to 180.36, AMD got absolutely kabooshed, almost $2 here. The 15s overbought in the negative trend on the sell on the 30, and if you look here on the 60-minute time frame, AMD is still bullish here, but we'll see what happens with AMD going into tomorrow. But here you can see the 15. When the 15 reversed to buy, the MACDs are above the pivot and pushing up here into the negative MACDs. This was a clear short, but again, you have a buy disconnect now, 2 out of 3. But here's the problem. The problem is that the 30-minute time frame was getting overbought right here into the negative MACD, and this was a great short here. This was a great long on the push down, pushed up here about $2, and then again, this sell divergence was monstrous here. NVDA, let me show you this great pattern here in NVDA. NVDA reversed to sell, NVIDIA on the 30-minute, but when the 15 reversed to sell, we had right here, you can see NVIDIA reverse sell. Now, I mean, this thing we were shorting here, 179.30. We were 8 cents off the high. So the 15 reverses to sell, then the 30 reverses to sell. Then what do you look to do? You short the first bounce on the 15 right here, 176.66, drops about 80 cents, and then just continually looks lower here. What else? Avago, big patterns here in Avago today. I got short this Avago early. You can see Avago when it gapped up this morning, right here, the 30-minute. Let me see the 60 here. Let me see the 60. Okay, this is Avago pushing up here, 302.19. Avago still bullish here on the 60, bearish here on the 30. So when the 30 correlates with the 15, you're in a sell disconnect. Look at this overbought condition, 298.80. Actually, I tried shorting it there. I think I was able to short. I might have been 298.90. I might have been. And then Avago dropped here, but another really great short pattern. I want to look at Hood, HOOD. Was down about 3% today. You can see here on the opening with Hood, the 30-minute time frame and the 15, you're pushing up here to new highs at 9:45, 107.42. The MACDs again on the push up, non-confirmation here. I'm just showing you how these patterns repeat themselves, and this is really super important. So with that, I want you to see the importance of this pattern, and then overall to be able to fully understand the divergences, how we look at all these patterns to be able to identify sell divergences throughout the day. Microsoft reversed to sell on the 30-minute time frame. What do you look to do? You take some shorts of Microsoft. Microsoft was a short. When the 30-minute time frame correlates, this is one of my strongest strategies. When the 30-minute time frame reverses to sell, Microsoft did not go negative. Microsoft reverses to sell on the 15 minute and the 30, okay? And you can see this is the first bounce here. 15 correlates with the 60. Okay, you're in a sell disconnect. And then what happens? You look to short the first bounce here, 514.73. And then you can, because you're in a sell disconnect, the 15 and the 60-minute time frames, you can use the 5-minute overbought conditions. And here's a really great bear flag at one point. Look at this beautiful bear flag right here at 220, 512.53. Got cabooshed about $1. And every overbought I tried to short this here at 85. The high was 80. But we'll see. Great pattern here on Microsoft. Again, pushing up here. You can see the push up here to 517.62. The overbought, the push up on the high end of the day. Look at the negative MACD. Look at the negative MACD here on the 60-minute time frame. Let's look at the 30. Again, you're pushing up here. The MACDs cannot confirm the high on the MACD on the 30. And when it pushed up here, you have the negative MACD on the 60-minute time frame. These are the patterns that I teach. These are the setups I teach. The no gut feeling. And basically, it's all about divergences and teaching you how to master divergences and become a great, consistent trader. This is, for me, is one of the greatest joys that I can teach and educate people using my software, whether you're trading index futures, commodity futures, stocks, ETF, forex, crypto. It doesn't make a difference. Divergence patterns, based upon my methodology, I feel you can be very, very successful. When I get back, I'll tell you what I expect for tomorrow. Okay, so for tomorrow, we have the ADP employment, but we have the GDP number at 8:30, so that's a big number. So we'll wait to see what happens with that number. Again, that's what's called a red number, all right? But what I'm looking at here is that right now, the spiders and the Qs, the Russell, we're all in sell mode here. And on the 15 and the 30, the diamonds, the 15 and the 30, the Russell's negative on all three time frames, 15, 30, and 60 on my indicator 4. For me, again, like I said, I think we're on borrowed time here. I just think that the market is really just way overextended. A healthy pullback anywhere from 8 to 10% between now and October would be remarkable to get that, at least one of those two gaps or both of those gaps filled, the 6,030 and the 5680, 5700 gap. And then I think we bottom, and then we go right back up here. My target was 6,500 back in November of 2024. All right, we'll see what happens. But again, the bottom line is we were close, 64 something, 64.45. But again, I think we get this pullback. I think it's healthy. The PE ratios are high. I don't want to go into fundamental analysis. I'm just looking at the pure technicals. I think we're extremely overbought from the time the weekly reversed to buy, got that first pullback on the daily, and we've up about 800, 900 points on the S&P from there. So with that, again, if we do get any overbought conditions tomorrow, the negative MACDs here, I think are going to play into it. Into the sell divergences on the 60-minute, not the 30. If we do trade higher tomorrow and we get these buy reversals on the 15 and the 30-minute time frame, again, the negative MACDs on the 60-minute time frame are going to do this to the market, are going to cause it to have a stone wall, and that is going to be a problem. So if we do get a gap up tomorrow, boom. If the 60-minute time frames reverse to sell, the spiders take out the 634.22. That's only 10 points from now. That's 93 on the S&P. If the Qs take out 565.70, right now we close at 567.32, $1.50. If we get the sell reversals on those two, now normally when you get the Russell to sell, like we did just now, Russell's negative on the 15, 30, and 60, the odds are that the other indices are going to follow. Okay, so if we get a sell reversal on the 60-minute time frame on the Qs, taking out the 565.70 on the 60 and the spiders 634.22. I will tell you the 60-minute time frame will reverse to sell. We'll look to short the first bounce or rally on the 5-minute overbought. The second will be the 15, and then the third will be the 15 and the 60 15 and the 30. Also, the GLDs take out the 307.16. The 60-minute time frames will reverse to buy, correlating with the 30 and the 15. We will look to buy pullbacks on the 5-minute, on the GLDs, gold, and then the 15-minute, and then the 15 and the 30. So there's the sequence pattern. So give a quick summation. Any rally tomorrow on overbought conditions with the negative MACDs on the 60-minute spiders, Qs, diamonds, Russell, I say let them have them, especially the spiders and the Qs. The MACDs are negative above the pivot, and I'll show you what I mean here. You can see here the spiders very negative here. MACDs negative above the pivot. So even if you get a push up here and the algos reverse to buy, and you get an overbought condition, something like this on the 30-minute time frame, you're not going to be able to make the MACDs are not going to make new highs here, especially with this negative MACD. I think that's going to stall. I think you look for lower highs and shorts. And if we do get a big sell reversal here and this algorithm gets taken out to the downside and this slips negative, well, we'll be looking for shorts all day long. All right. Okay. When I get back, I'm exhausted. It's only Tuesday. When I get back, I'm going to tell you what I'm going to be doing next Tuesday night. So next Tuesday night, I'm going to be hosting from 8 p.m. till 10 p.m. the Asian market session, which we call the Tokyo session. So many traders have asked me to do this. It's free. So please, there's a link that you're going to be getting or on this website. On my website, there's a link. If I'm going to be posting it on Instagrams, on TikTok, on YouTube. And it's really, it's free. Completely free. We'll be trading the Tokyo session. So many people who trade the prop accounts do very, very well. They make anywhere, some people make a couple $100 to a couple $1,000 that night. And if you have multiple linked accounts, it really pays off. We tried it last 2 weeks ago, about last Wednesday, and we're going to try Tuesday night now. And see the different nights, Monday, Tuesday, Wednesday, Thursday. We'll just try them out to see what nights are better. We did have some good activity last Wednesday from 8:40 to 10. Kind of slow the first 40 minutes, but people loved it. People did well. And if you're trading and you're sitting at home and you want to click away and trade, well, the Tokyo session / Asian market, phenomenal market, especially if you're doing prop accounts because there's no margin. If you're trading your own money, most firms will charge you anywhere from 3 to 10 times the amount than the intraday margin rules. So guess what? Let's look. There's more than one way to skin a cat. So I'm looking forward to doing that. It's completely free. I'm going to be streaming on YouTube, TikTok, Instagram. What else? Possibly X. Okay, TikTok, Instagram, YouTube. There might be one more. But anyway, we're going to look for my link. And guess what? We'll be able to be looking at the markets and live markets, and hopefully you'll be able to trade the markets with me and be able to be successful in your journey. All right. With that being said, thank you for joining me tonight on the Bull, the Bear, and the Ugly. Please hit the subscribe button, leave a comment. Thank you for joining me. Please join my community of traders from all around at sktrading.live. If you'd like to follow me on social media, please follow me on official Stephen Kalayjian on Instagram, TikTok, and YouTube, and X, okay? And if you like to call me or leave a comment or text me, my cell phone number is 914-500-7484. Thank you, everybody. God bless you. Have a great night, great day trading here. God bless you, and most of all, God bless the United States of America. Be well, everybody.
Thanks for tuning in to the Bull, the Bear, and the Ugly podcast, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe at sktrading.live. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.